Ladies and gentlemen, welcome to the Q4 and FY24 results conference call of GTPL Hathway Limited, hosted by Emkay Global Financial Services. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions at the end of today's presentation. Should you need assistance during the conference, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Pulkit Chawla from Emkay Global Financial Services. Thank you, and over to you, sir.
Thank you, Sagar. Good evening, everyone, and welcome to the Q4 FY24 earnings call for GTPL Hathway. We have with us today Mr. Anirudh Singh Jadeja, Promoter and Managing Director, Mr. Piyush Pankaj, Business Head CATV and Chief Strategy Officer, and Mr. Saurabh Banerjee, Chief Financial Officer. Without any further delay, I shall now hand over the call to the management for the opening remarks. Over to you, sir.
Thank you, Pulkit. Good evening, everyone. A warm welcome to everybody to earnings call of GTPL Hathway to discuss the financial performance of Q4 and FY24. The company made progress in its subscriber base across both segments, achieving the 1 million subscriber milestone in broadband business and closing CATV at 9.5 million subscriber base this financial year. As the largest MSO, we look forward for consolidation of industry and retaining customer base on economy of scale and quality offerings. In the broadband side, the growing trend of digitalization, connectivity and larger data consumption will help drive wide broadband growth as India is still under-penetrated as compared to the global players. We are a company with consistent dividend-paying history of the shareholders. For current financial year FY24, Board of Directors have recommended dividend of 40% as rupees 4 per share. I will now hand over to Mr. Piyush Pankaj, who will take you through the segmented KPI and overall business strategy.
Thank you, Mr. Jadeja. Good evening, everyone. First, let me share the usual KPIs for our cable TV and broadband business before delving into our strategy for both these segments. Our digital cable TV subscriber base as on 31st March 2024 stands at 9.5 million. Paying subscribers stand at 8.8 million. On a YOY basis, the increase in active and paying subscriber is 550K and 600K respectively. In the broadband business, as you are aware, we had crossed 1 million subscribers in Q3 FY24 and are ending the quarter and financial year 24 at 1.02 million. We thus have added 100K new subscribers, an increase of 11% on a YOY basis. Home pass stood at 5.80 million as on 31st March 2024, of which 75% are available for FTTX conversion. Home pass grew by 500K on a YOY basis. The broadband ARPU for Q4 and FY24 remained stable at Rs 450. The average data consumption per customer per month stood at 355 GB and 10% increase YOY. Our strategy for growth cable TV remains clear, and as previously shared with you all, we will continue to pursue both organic and inorganic opportunities for growth through penetration in existing markets, exploring new geographies, and acquiring smaller players respectively. In broadband segment, India has one of the lowest fixed broadband penetration. Jan 2024 wired broadband subscribers stood at 38.9 million. With 325 million households in India, current subscribers represent 12% penetration, which is far lower than penetration in developed nations of the world. The overarching strategy involves convergence of both cable TV and broadband services to provide holistic bundles to our subscribers to fulfill their entertainment and connectivity needs. Other services integration such as gaming, OTT apps, TV everywhere, etc. will help make it a complete package deal for our consumers. This will not only help improve customer stickiness, thereby reaching the churn, but will also help us increase our ARPU and thus improve our margins. I will now hand over the call to Mr. Saurav Banerjee, who will take you through the financial performance of the company.
Thank you, Mr. Piyush. Good evening to all participants. Let me take you through the quarterly results first. On a consolidated basis, revenue grew by 16% YOY to rupees 8148 million. Subscription revenue saw an increase of 14% YOY to rupees 3148 million. The broadband revenue stood at rupees 1308 million and registered a growth of 5% on an yearly basis. Operating EBITDA saw an increase of 12% YOY to rupees 1080 million, primarily led by higher growth in subscription income and ISP revenue. Consolidated EBITDA stood at rupees 1198 million, increasing by 8% YOY with an EBITDA margin of 14.7%. Net profit excluding other comprehensive income for Q4 FY24 stood at rupees 160 million. Now, on to the consolidated full year financial results. We reported revenue in excess of rupees 3,000 crores for the first time in the company's history. Revenue grew by 20% YOY to rupees 32,460 million. Subscription revenue saw an increase of 15% YOY to rupees 12,604 million. The broadband revenue stood at rupees 5268 million and registered a growth of 9% on a yearly basis. Operating EBITDA saw an increase of 6% YOY to rupees 4599 million. Consolidated EBITDA stood at rupees 5111 million with an EBITDA margin of 15.7%. Decrease in EBITDA and margin was primarily due to reduction in deferred activation revenue and decrease in non-operating income. Net profit excluding other comprehensive income for FY24 stood at rupees 1118 million. I would now request the moderator to open the floor for the Q&A session.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Guneet Singh from Counter Cyclical PMS. Please go ahead.
Hi, sir. Thank you for this opportunity. Am I audible?
Yeah, Guneet. Please go ahead.
Yes, so I would like to understand our revenues were in the range of 2,400 to 2,600 crores for the past couple of years. But right now we have seen quite a good growth in the revenues. So what is the main driver for this growth? Firstly, I would like to understand that. And secondly, even though our revenues have grown quite significantly, the operating margins have shrunk to all-time low levels. So, I mean, what is the reason for this fall in the operating margins and what kind of steady-state margins should we expect going forward? And would we be able to regain the margins that we enjoyed previously?
Yeah, Guneet. Guneet, this year, if you see that CATV revenue has grown by around 15%, which is more than 100 crores, which is coming to the copper. And ISP revenue has grown by around 9% in the overall. And because of this two good growth, you will see that there is a jump in the revenue side. Yes, on the margin side, if you say, as I always say that look at the operating margin which I have given in my presentation, you will see that we are doing at 24% of operating margin, which is given in the presentation. which is net of what we pay to the broadcasters and net of one-time revenue and expenses. So we are maintaining that operating margin. It is in the range of 24 to 26%, which is going up from the last 5 years, if you see. And we are at the same range which we are maintaining. So I would say that it will improve from here for the betterment.
All right, sir. And what kind of threat do we see from direct internet, I mean non-wired broadband? For example, Jio or Airtel, they are coming up with direct internet without the need for any wired connections. So don't we feel that even the cable TV and the wired broadband, they are threatened by such players, wherein people can directly view, the channels or TV through internet rather than getting these wired connections. So what kind of threat do you perceive from these? And like you mentioned that India has very low penetration in wired broadband and even direct cable TV. So probably don't you think that this can be, this phase of just moving instead of in the direction of wired, this can be just replaced by going wireless through platforms like Jio or Airtel. So don't you think, that is a possibility, or what kind of threats do you perceive from this?
Gunesh, you mentioned it right, that as I mentioned in my opening speech, that only 12% penetration is there in India, wherein if we talk about US market, it is already more than 70%, the Eurozone is already more than 65%, the China is at 55%, Korea and other countries are at 80% penetration of wired. Because one thing we have to understand that wired is the consistency is required, then you have to go for the wired. Because in the wireless, you will not get the consistent broadband. You can say it is going up and down, the speeds are going up and down depending upon the number of people under the tower. But still, I will say still in the wired broadband side, India is at the startup mode. Every player is doing their bit. The telcos are also there. The independent players are also there. We can talk about SAP, all are there into this market, and everyone has the open market. It's a very big market right now. We are considering that somewhere the wired broadband from 38-39 million will go to around 150 million in the next 5 to 7 years. So it's a big market for the country. So that's why we are not worried about the competition, as there is a lot of subscribers to take it.
All right, sir. Thank you for addressing the question. I'll join the queue.
Thank you. A reminder to all the participants, if you wish to join the question queue, please press star and 1. The next question comes from the line of Ravi Patel, who's an individual investor. Please go ahead.
Good afternoon, sir, and congratulations. So my first question is that there seems to be a change in reporting of the fiber infra. Our leased fibers have more than doubled from around 6,500 kilometers to somewhere 16,000 kilometers, and no mention of underground fiber either. So is there some reconstitution in reporting or some strategic change where you want to focus more on leased equipment?
No, it's more of, if you see from 97,000, we have gone to 1 lakh plus on the owned one. And the leased one, as it was, we can say, reporting error where we are showing the 16,000 plus, which we have corrected this year. As in the last 2 years, we have gone for the lot of connection from Airtel and Jio on that with the telcos. So there we did that correction in the reporting side. So these are the correct figures right now.
Okay, and so is my understanding correct that the rise in lease liabilities for the year is largely due to the rise in leased cables? And how much of increase in interest cost is split between debt repayments and interest on lease liabilities?
Come again, can you repeat the question, please? The voice was cracking.
Am I audible now?
Yeah, audible now. Yeah, please.
So, I just wanted an understanding. Is my understanding correct when it comes to lease liabilities for the year? Is largely for the year the rise is due to the rise in used cables, or like how much of the increase in interest cost is split between debt repayments and interest on these liabilities?
Yeah. So
So the finance cost, interest cost has two components, primarily two components are there. One is, of course, as you said, the debt cost, which is about, on an average, our debt cost is over 8.5%. So based on utilization of our limits, the debt cost may vary from quarter to quarter or from a reporting date to another reporting date. And there is an operating lease, so there is an accounting related entry which also is a part of the finance cost. So these are the two components. One is the real finance cost and one is the operating lease related accounting entry which is included in the finance cost. So these are the two components.
Okay, sir, got it. Thank you for the clarification, sir. Thank you for the opportunity.
Thank you.
Thank you. The next question is from the line of Anjali Mishra, who is an individual investor. Please go ahead.
Hello.
Hi Anjali, you are audible.
Hello. Yeah. Good evening, everyone. So my question is regarding project income and cost. So on a net basis between project income and cost, there seems barely any profit. So could you please guide me on the accounting of the same? And also, are we booking expenses we are yet to monetize? And also, because the previous guidance has shown 12 to 13% margin in the project, so I am currently only getting 2 million net on a 410 million cost.
Yeah, so this project, I think we have taken that in the quarter 3. So this project is granted by Gujarat ISP Private Limited, GISL, after tendering of rupees 46 crores, wherein the Gram Panchayat of 8,000 Gujarat villages and that phase 1 and phase 2 of BharatNet project has to be made Wi-Fi enabled by supplying the materials and installation of the same at the Gram Panchayat premises. So this project is almost over, and we have taken the revenues in the last quarter, and cost also we have taken the last quarter. Some of the revenues is fully pending, which we will take in the next quarter, as this quarter we have not taken. And yes, the margin is going to be around 12% margin on this project.
Okay, and one more question.
Expenses has already been taken. Some of the revenues are still to be taken.
Okay. And one more question is regarding the growth in active subscribers in your TV division has stayed at the same level pretty much post Q2 FY24. So why has that been the case?
You are talking about which subscriber, cable or broadband?
TV division, active subscribers in your TV division.
CATV division.
Yes, TV division.
Yeah, so CATV division, if you see, active subscribers year to year, Y to Y has increased by around 550K, and paying has increased by around 600K. So there is an increase in the subscriber base, more than 500,000 in the year.
So did we see a lot of churn in H2 FY24 and there was less net addition to the subscriber base?
Yeah, churn is going to be there, as I explained in earlier calls also. But yeah, since we are doing the acquisitions and all, which is the churn is between 15% to 17%, varying here and there with the market. But yeah, between 15 to 17% is the churn which is going on. But yes, we are doing the organic and inorganic both, and we are adding the numbers.
Okay. Thank you so much. Thank you for this opportunity.
Thank you.
Thank you. A request to all the participants, please restrict your questions not on speaker mode, but please use handsets while asking your question. The next question is from the line of Ketan Athavale from Robo Capital. Please go ahead.
Hello, sir. Thank you for the opportunity. I had two questions. Firstly, can you give guidance for next 2 years regarding revenue and margins? And secondly, when do we expect to reach 19 to 20% kind of margin on full revenue basis?
If you talk about the CAGR, we have given that we are rolling up at the 17% of CAGR on the revenue side. And EBITDA growth is a bit down because earlier we were growing at 12 to 13%, now it is at 7 to 8% CAGR this year. But yes, as we go forward, there are plans to increase the revenue and reduce the cost. That's already we have doing that in FY25. So we are hopeful that in FY25, the operating margin we are talking about, it will again jump back to 26%, 27%. And there you will start seeing that there is a jump in the net profit also. So that's what we are doing right now and planning to do. That's the plan which we are taking care of in this FY25.
Okay, thank you.
Thank you. Participants, you may press star and 1 to join the question queue. The next question is from the line of Sanika from Sapphire Capital. Please go ahead.
Yeah, hi. Am I audible?
Yeah, Sanika.
Hello.
Please.
Yeah. So for quarter 4, we had given a guidance of 17% EBITDA margin. So I just want to understand why have we not been able to achieve it?
Yeah, so we did around 15% margin instead of 17%. That is because of two revenue which has gone down, which is one-time revenue, one is active and one is other income, which we see. Both have gone down around 30 to 35 crores has gone down because of that. If we add that back, we will be at around 17.5. In presentation, I have given the operational margin or operational EBITDA also just after the financial. If you see there, we are at 24% EBITDA margin right now, which is 1% down from the last year, but yeah, we are very, it is in the range of 24 to 26% only, and we are confident that we will get back to 25 to 26% next year.
Okay, so can we say that in the next year, which is FY25, this year, which is FY25, we will be able to do 20 to 21% kind of margin for the full year? And can we say quarter 1, we can get around 17 to 18% margin, which were like for quarter 4?
One thing which I'm always saying in the call that because we have to see the margins after netting the payment to broadcaster and revenue from the broadcaster. That's why you will get the proper EBITDA margin, operational EBITDA margin, which we did at the operating margin. So that's why we have started giving the operational margin, which is, if you calculate it for the year, and we'll give you that, it is between the range of 24 to 26% throughout. So we are, as a business, we are maintaining that operating margin throughout. This is because the pay channel, or you can say the payment to broadcaster and the revenue from broadcaster, there it is a mismatch. And because of that, you are seeing that on the overall, you are seeing that the margin is going down because the contribution of marketing and placement revenue is lower than the main revenue of subscription and ISP revenue. And because of that, it is pulling down the margin. But you have to see it by netting what you are paying to the broadcaster and what you are getting from the broadcaster. If you net that, you will come to the real business margin. And that's what we are giving in the operational margin.
Okay. And next year, like we have guided before, a 20% growth. So in FY25 as well, we can expect 20% growth in our top line?
Yeah. We are talking about the operational margin. As I said, that it is going to be between 24% to 26%. We are trying to maintain that or increase that. So on operational side. In real margin, if you talk about, because it depends on that what we are getting it from the broadcaster, what we are paying to the broadcaster. Based on that, what contribution of pay channel or marketing and incentive revenues, placement revenues is going to be in the EBITDA. Based on that, your margin will go up and down. So we are not sure about that because we do the business in the net basis to always thing on the net basis. So I'll say that if you follow the operational margin, that will be great for us as analysts.
Okay, and just one more question, which is on the depreciation side. We've done 337 crores of depreciation we've had in this year. So next year again, can we expect a 25-26 crore increase based on the capex guidance that you've given last year?
Yeah, this year is a bit exceptional, but yeah, next year also, because I have already told that we have to do some of the capex for maintaining the business. As the churn has gone up from earlier 7 to 8% to now 15%. So that's why, yeah, before COVID it was 7 to 8%. After COVID it has gone up to 15%. So there you have to do some capex for maintaining the business, and those are adding into your depreciation, which is not contributing into the. So that's it will increase, but yeah, it will be not increase at that level, but it will increase.
Okay, and capex number is around 400 crores, right? Which is the annual maintenance capex?
Yeah, we are going to do between 350 to 400 crores this year.
Oh, sorry, can you repeat the number?
We were going to do capex of between 350 to 400 crores in FY25.
Okay. Thank you.
Thank you. The next question is from the line of Jaykant Kasturi from Way2 Wealth. Please go ahead.
Yeah. Hello, sir. Sir, I was going to your balance sheet. In terms of your borrowings, it has increased. Could you tell me the reason? Probably is it because of the project which you are doing right now, or it's due to any other reasons too?
Yeah, so you will see that there is an increase in the borrowing. This is mainly due to, you're right, due to the project, we have to give some margin money, and we have to utilize our limits, the OD limits fully, and because of that, you will see there is an increase in the borrowing right
now. Sir, do you see it coming down by first half of the year?
Yeah, within 25, FY25, it will be at the same level as it was in FY23. In FY24, it has been increased because of the projects, and because of that, we have to utilize our all ODs at the maximum level. We are expecting that it will come down in FY25 with the time.
Sir, and with regards to your trade receivables, primarily from the broadcasters' receivables, how do you see it?
Yeah. So it's trade receivable is both you want to say trade receivables and payables. It's almost both sides around 80% is the increase. That 80% is from pay channel for the broadcasters.
Okay, it's not particularly one broadcaster. These are
no, it's not particularly one broadcaster.
Yeah. Okay.
You have to receive money also from them. You have to pay them.
Yeah, that's true. Yeah. Sir, in terms of your, I was looking about the activation cost, it has come down very significantly. Do you see it further coming down for this financial year also?
Yes, it will come down because see, activation is the deferred one, which it's like you get the activation and you have to defer it for 5 years. So this all you are saying that which is going down is a deferred revenue which is going down.
Okay.
So now we are doing the activation as we are taking activation and straight charging into this year, that year only. And that's why I was saying that as non-cash one time, which we will have huge, and it has come down by around 16 crores this year. Next year also it will be come down by around 7 to 8 to 9 crores, which we have to see.
Okay, so thank you.
Thank you. The next question is from the line of Siddhant Shah from Corporate Database. Please go ahead.
Hi, sir. This is Siddhant here. Thank you for letting me ask the question. Sir, I had a couple of questions. One, I think we completed the acquisition of Metrocast in this quarter, right? Did we consolidate that entity before itself, or after this consolidation, has that added, subscribers and the subscription income to our P&L?
Yeah. No, we have started consolidating it from the quarter two, when we are taking it up to 4% and the control on the company. This quarter we have, as per the agreement and all, we have increased our stake to 50.1% now in the company.
In this quarter it was 50.1%, right? After this quarter, like in March.
That's right. This quarter it is 50.1%. So the deal happened in somewhere around 13th of March.
Correct. We have consolidated that entity from Q2 itself, but.
That's right. In Q2 we have given that we have started consolidating Metrocast numbers.
Got it. And now since we have acquired the majority stake, how many more subscribers has Metrocast added to our active subscribers, or that has made no change there?
Yeah, it's like 4.5 lakhs, which is there in 9.5 million which we have given. So 4.5 lakh subscribers has come from the Metrocast.
Got it. And just, sir, on the quarter-on-quarter thing, I noticed that there has been a slight degrowth in both subscription and broadband revenues on a quarter-on-quarter basis. But we've actually seen our number of subscribers increase while ARPU is stable. So just wanted to understand, is that just an accounting entry, that is why it has decreased?
Yeah, it is that. Then we have to see that there is a one day which is lesser in this quarter than the quarter three. So there is an effect of 1 day revenue which is there in both ISP and cable side. Plus, as you know, this quarter there was Ramzan, and in the Ramzan time always the subscriber goes down and again come back. So they are coming back in April. But yes, March we got affected due to Ramzan, and there we see in this quarter we are losing around 1 crore of revenue on that. So it's a 1 day plus 1 crore.
Got it. Okay. Fair enough. And sir, in terms of just CapEx, did we include Metrocast acquisition in our CapEx figures for FY24? And are we going to keep the stake at 50%? Or is FY25 CapEx numbers accounting for the remaining acquisition of Metrocast?
No. Whatever we did, that is coming into the investment in our books right now. And from next year onwards, we are going to go for the CapEx and all, because the deal was to, as you can see there, that was to give him the check or cash for 25 crore plus the boxes to let it.
Right.
That's why. So those all have gone into the investment right now. So no CapEx has happened. The CapEx to this year is 396 crores, which has happened. Out of that, 200 crores is cable and 196 crores is capital.
Got it. So this acquisition is not counted in that CapEx figure, is it?
No. It is in the investment.
Okay. It is. Okay. Got it. So just in terms of now, I understand that the churn has increased, and I was just looking at the operating EBITDA, which you emphasized on. We spent almost around 400 crores of CapEx this year in FY24, and while our EBITDA has barely increased by 6%, so which is an increment of around just 30 to 40 odd crores. So we spent almost 400 crores in increasing our operating EBITDA by just 40 crores. So incremental, return on our CapEx has been barely 10%. So going forward, do you think that this metric of our incremental growth will improve with our new CapEx that we are doing?
Yes, it does. So this time, as I said, that the cost side, if you see, the NTO 3 has come into the effect, and already the whole margin is the pressure from the pay channel that is there. That's why we are seeing a muted growth of 6% in the operating margin, if you see in the EBITDA side. But from FY25, it should become stable. Again, we should start giving somewhere between 10 to 12% growth in the EBITDA side.
Got it. Perfect. And last, just since you've mentioned that we are very underpenetrated in our broadband as a category, India is very underpenetrated. What is the market growth of broadband that is happening, and what is the growth that we would be looking at given our geographies and our penetration? So what would be our growth estimate, because we are so underpenetrated, but however we have a lot of competition as well. So what would be our growth expectations, and what will be the market growth expectations according to you?
The market, if you see, last 2 years, it has grown from 22 million to 38 million right now. So somewhere market has grown at around, you can say 50% on that way in last 2 years. From 23 million to somewhere around 38 million right now. And if you, that growth rate, a bit of that growth rate, not 50%, at least 30%, 25% is maintained, then we are looking forward that we cross, the whole industry will cross 100 million within the next 4 to 5 years' time. So that's what we are looking forward, that if the PNBR will be maintained in this market, and also the opportunity is very big. And as you know, BharatNet projects are coming, which is going to also, the growth will come from the Tier 2 cities and the rural in the broadband right now, and where the infrastructure is getting made. So we are looking forward that as the infrastructure improvement will happen, this industry will go and improve from the time from there. So, BharatNet project is already on the under 16 states that BharatNet project is starting now. Wherever the BharatNet project is completed on those states, you will see the penetration is more. The states which is still lacking is where the BharatNet project is not there. So all those things are there in the India. So we'll see that how it will improve. But yes, we are very hopeful. But the penetrations are very high in the other countries. India will witness that also with the time.
Got it. Perfect. Thank you so much, sir. Thank you.
Thanks for that.
Thank you. The next question is from the line of Tanya Gupta from Green Portfolio. Please go ahead.
Good afternoon, sir. Thank you for taking my question. So my first question is, what is the update on GTPL Genie app? If you can guide us.
Yeah, so we are relaunching the Genie app. It will be launched by end of April or first week of May somewhere. So already app has gone into the UAT with the testing, and we are hopeful that it will be launched by end of April or first week of May.
Sure, sir. So in Q2, you had indicated that there were 100K subscribers on board. So if you can elaborate on what's the status currently?
On the GTPL Genie you're talking about?
Sorry, sir, I can't, pardon me.
You're talking about GTPL Genie?
Not, sir.
Your voice was a bit cracking. Can you repeat the question, please?
Sir, in Q2, you had indicated that there were 100K subscribers on board. So what's the status currently?
100K on Genie? No, I have given somewhere around 40K at that time. Q2.
All right.
Yeah, 40K on that, 25K is from the 26K is from the broadband, the rest is from the cable at that time. Now it has reached to around 75K. Out of that, around 45K to 50K, 45, 46K is from the broadband subscribers, the rest is from the cable subscribers.
So, sure, sir, can you guide on the timeline when we can see the definite impact of it on the performance?
Yeah, we are hopeful that we are launching the new app with TV everywhere and all those things, all those facilities with all the OTTs and all. We are hopeful that will be the impetus in the market. Yes, as you know, OTT market has a big slump down in the last 1 year, which we are seeing that big OTT players also have a slowdown in the subscriber base, but still we are hopeful that we will start getting the more OTT subscribers in our own universe.
That is helpful, sir. Thank you.
Thank you. Participants, you may press star and 1 to ask a question. The next question comes from the line of Madhur Rathi from Counter Cyclical Investments. Please go ahead.
Thank you for the opportunity, sir. Sir, I wanted to understand our EBITDA margin. Sir, considering this broadcasting, whatever we pay to the broadcaster as well as whatever we get is a part of our business, and you need to take it as a bundle for your EBITDA margin. So what kind of margins can we maintain considering those charges or whatever we get, and what will it take for us to get more than we pay to broadcasters?
So as I said earlier also that generally you have to see the business by netting off what you are paying to the broadcaster and what you are taking it from the broadcaster, because there the margin of marketing and placement income is very low margin, and that is the contribution in the EBITDA is low, and that's why it is pulling out the margins in that way. But you have to see by netting it off and see that whether what you are paying and what you are getting from the broadcasters both are in that way, and what margin you are maintaining. That's we have given in the slide that we are at around 24-25%, and we are going to improve from there.
But sir, as I understand, this is a part of our business because we need to pay those charges as well as we get some of those charges. So this is inbuilt in our margin. So that's what I'm trying to understand. That even considering those charges, what kind of margins are sustainable on our business?
This is going to be between 17% to 18%. That is going to be there that way if you look into that way. But I will say our operating margin, you look into that way, into the way which I say by netting it out so that you can know that, okay, what you are doing in the business, either we are improving or whether you are going down. Because here the margin changes at the time. Somewhere, some marketing incentive and all we are getting 9%, somewhere we are getting 15%, somewhere we are getting 2%, somewhere we are getting 3%. It depends on a different party. That's why the margin varies.
Okay. And so my next question would be, so the broadband ARPU growth that we have seen, so do we, so what kind of growth price hike can we expect from the broadband side, or this is being dictated by the bigger players and we just take whatever we can?
No, we are growing. If you see last 3 years, we have improved from somewhere 60 to 1 million man subscriber base. So 3 years back, we are saying that we are going to somewhere increase by 50% to 60%. That's what we did right now. We are looking forward that we will maintain that growth from 1 million plus subscriber base from here. We are going to add between 100 to 150K every year, and we will reach somewhere around in the next 3 years, somewhere between 1.2 to 1.5 million between that subscriber base. So that's we are going to maintain.
So the question was regarding the ARPU growth, that is 460 for FY24. So where do we see this going forward? So do we take price hikes based on our own internal guidelines, or is it dictated by the bigger players? That was my question.
No, the broadband is the volume game right now, not the value game. We are maintaining our ARPU in this competitive market, and we will try to do that to maintain our ARPU throughout. Yes, through volume, we are going to increase. As I say that this market is very, very good. It just keeps starting up right now, the 38 million subscriber base in India. We are maintain our ARPU, which we are doing in this competitive market, and we have to play the volume game.
Okay, so that was helpful. And just my final question, sir, what would be the average ARPU that we are expecting from the GTPL Genie?
GTPL Genie is more for the stickiness rather than making the revenue. If you see, the lowest price there is 119 rupees for 7 apps, which is there, and monthly, and which is going up to somewhere around 300 rupees for 15 apps, the monthly side if you talk about. So there it is more for my customer for the stickiness rather than making the revenue out of that. Yes, we are making the margin of around 18 to 20% of that business also. So that's the range which we are looking forward. Somewhere the ARPU will fall between that 119 to 300, and the margin will be somewhere between 18 to 20%.
Thank you. Members of the management, I believe Mr. Rathi has dropped from the question queue. So
okay.
We'll take the next question. That will be from the line of Raj from Arjav Partners. Please go ahead.
Hello, am I audible?
Yeah, Raj, please go ahead.
So I skipped a point on the app part, which you are intending to launch at end of April and in May. So can you elaborate on the app, what exactly it is and what incremental revenue that we expect from it?
So that it's a completely B2C application for the consumer, where consumer can see the TV everywhere, can watch OTT application, any OTT application where consumer can use direct into the any OTT, the pay OTT or free OTT, or you can watch any linear TV also use the app. So that is we are completely launching. It's completely MyGTPL B2C applications, where it's जो GTPL के customers है, whether it is on a cable TV or broadband, will get free application service on a linear TV side also, and yes, we get OTT also.
All right. और ये जो ऐप है, इसकी कोई उसकी आपके कितनी कॉस्ट अभी तक इनकर की है ऐप डेवलपमेंट में?
वो that is it's we'll let you know एक बार आपसे अलग से बात करेंगे तब. But basically it's completed. The last 8 days also exercise चल रही थी. The app was already there, but we are launching completely in a friendly user. So it's completely the ease of operation purpose. So we are launching completely in a new version.
Understood. And whosoever subscribes to the internet, so they get the app for free. Is it like?
Yeah. If the customer is for GTPL ISP customers or GTPL Limited customers, will get free.
All right. Okay, sir. Thank you so much. Have a good day. Bye.
Thank you. Participants, you may press star and 1 to ask a question. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to the management for closing comments.
Thank you. I would like to express my thanks to every participant who took their time out to attend the call. For any queries, please feel free to connect with Orient Capital, who are our investor relations advisors. Thank you once again. Have a good day.
Thank you. On behalf of Emkay Global Financial Services, that concludes this conference. Thank you for joining us. You may now disconnect your lines.